As we can see, a correction of euro-American dollar goes on amid a lack of fundamental backdrop. The US saw the release of its housing data yesterday. Figures came quite upbeat, boosting the greenback against the euro and the sterling. However, buyers used that moment as an opportunity to offset losses and pushed the euro and the pound up. Today, the currencies are still in demand. Perhaps the lows of this week will be final before the euro and the pound extend growth. As for today's macroeconomic calendar, it contains several releases. The UK has already delivered its inflation data. As we can see, inflation increased in May, although economists had forecast it to slow down significantly. In May, consumer price inflation in the UK held steady at 8.7% year-on-year, above market expectations of 8.4%. On a monthly basis, figures grew by 0.7%. In this light, the Bank of England will have no other choice but to raise interest rates at a meeting tomorrow and maybe signal a continuation of the tightening cycle. Speaking of the other events, some ECB and Fed officials will speak today. Of course, Fed Chair Jerome Powell's testimony will be in focus. He will explain to the US Congress why the regulator decided to pause hiking rates in June. Maybe he will also reveal some future plans for monetary policy. Markets expect 2 more rate increases from the Federal Reserve at least. Therefore, the greenback may strengthen against the pound and the euro. Nevertheless, the fact that the American regulator decided not to lift rates in June may also indicate that the Federal Reserve will announce a pivot in its aggressive policy and keep interest rates at current highs. A lot will depend on macro data. Although the Bank of England expected a fall in inflation, figures showed a growth. If the same things unfold in the US, the regulator will have no other option but to raise rates again. Anyway, economies feel quite stable now, and high interest rates are not posing a serious risk for them right now. Euro-American dollar pair is trading within a sideways channel. The pair has reached a new weekly low. It will become possible to buy at 1.0894 after a false breakout. Buyers will also attempt to push the price to 1.0933. If no consolidation follows but a false breakout occurs, we may open short positions targeting 1.0894. A breakout and a retest of this mark to the upside will allow us to sell with the target at 1.0859, where long positions could be considered on a rebound, allowing a correction of 25-30 pips. If there is no bearish activity at 1.0933, the price consolidates above this level in the second half of the day, and Mr. Powell says nothing important, we may look for buy signals. In case of a downside retest of the 1.0933 mark, Euro-American dollar pair may surge to 1.0969 with a target at 1.1029, where it will become possible to sell on a bounce, allowing a correction of 25-30 pips. A false breakout at 1.0969 and 1.0933 will also allow us to open short positions. A British pound American dollar pair has reacted to data on UK inflation. A false breakout at 1.2795 will likely make a nice intraday sell signal targeting 1.2737. If quotes break through this mark and retest it to the upside, the price may fall to 1.2683 and 1.2625. The pound may still decline, although inflation data came better than expected. Overall, inflation no longer rises or falls, it holds steady on a yearly basis and has increased month on month. Therefore, the results could have a double meaning. A false breakout at 1.2795 or a false breakout at 1.2737 with a retest will make a sell signal targeting 1.2683 and 1.2625, where long positions could be considered on a rebound, allowing a correction of 30-35 pips. If buyers protect 1.2373 and the price consolidates above 1.2795 in the second half of the day, buying volumes may increase ahead of the Bank of England's meeting tomorrow. In such a case, targets stand at 1.2842, 1.2876 and 1.2911, where we may open short positions allowing a correction of 30-35 pips. We may sell at 1.2842 and 1.2876 after a false breakout only because entering positions against such a strong bull market is a bad idea. Good luck!